Well, first of all, to your first question, guys like Jeffrey Gundlach and Michael Hartnett and the CIO, Chief Investment Officer, Morgan Stanley, are not speaking to the plebes. They're speaking to institutional level traders. So they're telling the people at the top of the financial food chain, this is something you've never heard from us. So we're couching it by just calling it 60-20-20 or 25-25. Michael Hartnett's newsletter is so expensive that no one mainstream reads it unless you are a institutional sized trader or hedge fund, running a hedge fund or whatever. These people at the top level are being given the acknowledgement, the wink of the eye, if you will, by the same banks that have been suppressing the price. At the same time, we've talked at length about, and I started my first couple podcasts with you in 2020, we talked about the others that showed up on the Commitment of Traders report, which there was always just two groups of reportables. The largest positioning in the Commitment of Traders report published by the COMEX were the hedge funds and the commercial banks. Then all of a sudden there's this group called the others. Who are they? They are sovereign wealth funds. They're central bankers wearing a different hat. They're friends. They're an offshoot, if you will, or family offices of tremendous wealth start standing for delivery, which I'm like saying to you, Dunnigan, this never happens. What, less than 1% have stood for delivery my whole career? At this point, it's been 30 years I've been doing it. Something's not right. And now we see it. Of course, we've seen it with almost 40 central banks repatriating their gold from the Bank of England and the New York Federal Reserve. Early adoption into backwardation right now. We see problems of getting the metal. Sorry, there's a 8-week delivery delay, folks. We have a shortage of manpower and trucks in London, we were told. Or, not really a good example, but gets the point across. Venezuela says to Bank of England, can we please have our gold back? No, you can't. And when you see 40 countries pull their gold home from the Bank of England and New York Fed, they were there because for many years you had the Western rule of law and stable, liquid, efficient markets, the COMEX and the LBMA. They don't care. And you're seeing exchanges, the Shanghai Metals Exchange and their expansion in multi-jurisdictional expansion, one being built right now in Saudi Arabia, one just completed in Hong Kong, which allows you to take metal off of the exchange through Hong Kong and receive it directly by trading yuan into it. The people who are doing this are the central banks, and they are the most well-informed traders on the planet. That's number one. Now it's moving to the commercial banks who are telling their institutional-sized clients, early adoption is everything. And this is why most people fail at investing, because they move rather than trusting their intuition and listening to the rants of a guy like me. What the hell do I know? Or Alistair, what do we all know? Well, we've been right. And we have been right. By hook or crook, we've been right. And, we were laughed at. And you look at an environment where Wall Street refuses to acknowledge it, but now they are at the highest level. But they don't tell you, yeah, we've been wrong. We laughed at all of you guys who wanted to buy gold and silver, yet it's outpaced the 10-year Treasury 2-to-1, doubled it. It's beaten the S&P 500 with dividends reinvested for 25 years, which, by the way, no one ever does. No one ever does reinvest all their dividends. But we are living in an environment of negative real rates, and you could argue yield suppression, where they're trying to keep the yield down best they can, monetization of assets. And this has pushed investors for a long time into risk assets, which have inflated valuations, like all the Mag 7. And it's hiding the risk. And that risk hiding, well, the insiders know. Why do you think they're leaving? As the public's chasing that FOMO. This isn't free market pricing at all. And the assumptions of return are off. You can't make these assumptions in this environment. And I think, to Alistair's point, the one thing about having gold and silver in your hand is it is an asset that has no counterparty liability. And if you do it before the masses figure it out, like the way the central banks started doing this 5 years ago, 6 years ago, 7 years ago, and then the others being the sovereign wealth funds and the commercial banks, these are people at the highest level. So yeah, I would say it's everything. And to Alistair's point of the ETFs being expensive, yeah, you're paying BlackRock and JP Morgan a 60 basis point management fee to, in essence, use your metal to drive the price down. There's an 81 million share short position in SLV right now. And what the hell is that? It's just, as Ed Steer says, it's grotesque. And it is. This drives the price down. It allows them to pull metal off elsewhere. But, you're paying them a 60 basis point management fee. You can store in one of our Brinks facilities for a fraction of that. Real stuff, which you can never take possession of SLV or GLD. It is expensive. But through all of this, and even this month where we've seen a big fallback of 10%, 58,639 contracts taken off. Multiply that times 100. You got 586,000 ounces of gold. No, 5,863,900 ounces of gold taken off the exchange. And multiply that times 4,000. So you're talking an awful lot of money worth of gold coming off just this month, but it's been that way every month since November. So what's the takeaway? Well, the takeaway is this. Starting in 2017 or 17, the central bank started buying and repatriating their gold. And then it proceeded to be the family offices, the hedge funds, the sovereign wealth funds. Now it's the commercial banks are telling us this. And at the same time, but that excluded the New York traders all this time, until November of this year. And now every month you're seeing deliveries like this of millions of ounces of gold and silver every single month, billions of dollars worth every single month. And again, call it reverse psychology, use it contrarianism, that's a word. Why isn't anyone talking about this on the mainstream? Why do you not hear about the record deliveries? Who's taking billions upon billions upon billions? I mean, keep on going, billions upon billions every single month. Who's doing it? Who's bleeding dry the LBMA? Why is there no talk of this? It is because the lack of journalistic integrity or effort on their behalf to tell anyone what's truly happening, including the people who are trying to decide which way to invest, is ridiculous. And it's just like this pullback that we've seen, right? The mainstream media is all over it. And a lot of the things they said are valid. A lot of them are. It was overbought. It had gone up for 9 straight weeks. It had blown through moving averages. It was in need of a correction. They capitalize on all of that, and then they'll put a cap on and say maybe it's topped and it's over, just like in 2011 and 1980 before that. But what they fail to mention, which invalidates all of it, is that, the snowball that was pushed down the hill to start this going happened in the access market when New York was closed, when there were no markets open before Asia opened, when no trader, Alistair will tell you, that trader would be fired and shot, not in that order. Any trader that would dump billions upon billions upon billions upon billions of gold and silver at the most illiquid time of the evening, when New York is not open, no traders there to catch that, all you're doing is triggering sell stops that drive the price way down. You are guaranteeing yourself, the worst settlement. And then, of course, who did I mention? Bank of America and Morgan Stanley? Well, Michael Lynch says they came right in and scooped up physical, shows the numbers, and silver went right up. So this is all a game that is being done for maximizing the effect, the fear. And there is not one rational trader on the planet that would do that, would dump it in the access market. They would dump it over hours or days, slowly bleeding it into the system, not telling these traders how much they want to sell, slowly so that the demand would be commensurate with the supply. But they failed to tell you that. They should have said all of these things are true, but they dumped it. They dumped it when there was no market open. So everything they say is invalidated. And all the sell stops that triggered, freaking everyone out, getting all what's going on with gold, what's going on with silver. They never called when gold was going up for 9 straight weeks in a row. And I think the powers that be understood we were entering a period of time where the public was waking up. That's a bad thing when you have a wicked short position. It was damage control. It was short covering. It was fugazi. And you'll see it right back up, I promise you, before the music stops. If this had been done the right way, slowly bled out over days and weeks in New York trading, I'd be less confident. But any idiot, stupid idiot that would dump it like that when there's no traders, well, that invalidates everything that the media said, no matter how rational and logical and valid those statements may be otherwise. That's just my 2 cents.